Well, hello and welcome to another episode of the Lending Podcast. We are your hosts. He's Jeff Jones
Hello.
and I'm John Burnham. Thank you for being with us again today. We have a great topic for you. We are going to be talking about reverse mortgages,
Love it.
which are quite literally the opposite of a forward mortgage.
Yeah. So most mortgages people think about, you're buying a home and you're paying it forward,
That's right.
right? Reverse is the opposite. You own your home and it's paying you.
That's right.
So this is a great concept. A lot of the underwriting is the same, but we want to go over is really the demand we're seeing as this continues to be an economy where people are wanting to pull more equity out of their home to live the life they want to live.
That's right. That's right. And the first thing to know is that we're here in Texas, so we're going to talk about Texas guidelines. You need to be a homeowner that's at least 62 years of age or better.
Or better.
Older, but better.
That's right.
And the most important thing too to understand is there's when it comes to a reverse mortgage, it is not for everyone. Okay, I want to be very, very clear. This is not something that works financially for every single homeowner out there that is 62 or older. However, it is a great tool. It is a great financial tool in many circumstances to help a homeowner remain in your home. Perhaps you want to take out some cash. There's also ways to get a monthly stipend instead of taking out a lump sum of cash. We're going to talk a little bit about some of the different tools. The cool thing really about a reverse is you don't have to qualify from an income perspective. You do have to show the ability to pay your property taxes. You do have to keep up with your insurance, any association dues. But basically, you could borrow money from your house and never have to pay it back.
That's right. And that's the simple reason why most people do reverse mortgage is they don't want a mortgage monthly payment. You know,
right.
If they could eliminate that out of their monthly budget, then they can really have the freedom to live the life that they feel like they want to live as they age in place. So it's different for everybody. So every scenario is different. And there used to be a lot of bad connotations to reverse mortgage.
There
I
have been.
remember a lot of horrible stories about people saying reverse mortgages are evil. A lot of changes have happened in our industry with regulations. One of the biggest ones was 2015 regulation. That was after the 2009 regulation that allowed, HUD came out and says, you can actually do a reverse mortgage for purchase now, starting in 2009. And then that created some really big confusions about how that works. And so in 2015, there's all these other educational requirements that are now in place to protect the borrowers.
That's
because
right.
the thing that never wants to happen is, that people are harmed during the process of taking out equity of their home. And so, the requirements are pretty hefty of making sure the borrower understands what this means for them. And I love that. I love that there's a huge education piece.
Yeah.
So even for a reverse mortgage banker to provide you estimates, and actually give you the exact scenario and quote you quotes, like you have to actually go through 90 minutes of training. It's a training course by a third party. The broker can't give you that training, and it's something that's required, before you go into an agreement.
Yeah, let's talk real quick about what it's not, because
Yeah.
this was something that I think got a bad rap, perhaps some of the press that was out there about reverse mortgages. And by the way, these have been around since 1989.
Yeah.
Most folks don't also know that, but like you said, there's been a lot of improvements, enhancements, expansion to the program. This is a federally insured mortgage. It's like an FHA loan. Essentially, it's federally insured, backed by the federal government.
Right.
But here's one thing it's not. It is not a pre-sale of your home to the bank.
No.
That's something that I think is out there. It's like, oh, if I do a reverse mortgage, if something happens to the homeowner and they pass away, the property automatically goes to the bank or something like that. No, not at all. It is part of your estate, just like your regular home and your regular mortgage. In fact, the heirs to the property have the ability to refinance the property and refinance that loan out of a reverse mortgage into a regular forward mortgage, as we now say, to contrast the two.
And they have a lot of time to do it.
They have a lot of time to do
like
it.
12 months or more.
Yes, up to 12 months, I think, even more potentially.
Yeah.
You just have to communicate with the lender. So what's really involved in this? Like, how does it work? What's the technicals of it? Well, when you take out a reverse mortgage, your interest is accrued on top of the balance each month. So the interest rates fluctuate. That's the other thing about a reverse mortgage. They are variable interest rates. And so each month, your balance grows a little bit. So if you have a $100,000 reverse mortgage, and let's just say the rate's 6%, okay, well, that's basically a $500 a month interest charge, give or take, that is adding to the mortgage. So at the end of year one, you owe 106,000 instead of owing 100,000, right? Now, why would someone want to do this? Well, like you said a little while ago, you don't have to pay this money back. This there's no monthly payment on this. Now you can, which is interesting, you can make a monthly payment. You
Sure.
can pay your interest. But if you were doing that, you'd have a regular mortgage and you just have a mortgage payment, right, to pay the balance down. But the reverse mortgage balance grows over time. And if you're in the house 30, 40, 50 years past age 62, it doesn't matter how big the balance gets. You never have to pay it back. As soon as one or both parties, whoever's on the reverse mortgage, pass away, then the heirs have the ability to sell the property, refinance the property, take it back over if there's equity there. If there's no equity left, the property just goes back to the bank. It's basically called a deed in lieu of foreclosure. You can sign the house back over to the bank. The heirs do not have any financial obligation, and there's essentially no equity to split.
Yeah.
So again, pros and cons to this.
Yeah, and to
yeah.
touch on like the payment back to the bank, there's a great concept with reverse mortgages now is that you can never owe more than the house is worth. So the bank is taking a risk.
That's right.
Right? A pretty big risk, actually.
Mm-hmm.
And at the beginning of when you close a reverse mortgage, they show you like your payment schedule and basically like the value of the home and the value of the loan. And so those things correlate because it has to continue to have a baked in buffer of the loan to value. It can't go. It can go to 100% on accident, but it's not scheduled to.
Right. Right.
But if for some reason somebody borrows over the life of their reverse mortgage $600,000 and the house is only worth 550, the family doesn't have to make up the 50 grand.
That's right.
The bank is just going to get 550 and
That's
eat
right.
the difference. So that's the beauty of the reverse mortgage
Mhm.
is that there's a security there of it can never be worth more than the house is worth. So the payoff is never going to put you negative or
Right.
underwater. You'll never be underwater. So
Yeah,
I like that.
and you can refinance in and out of a reverse mortgage. So, for
Right.
instance, if you have a balance out there right now, and under this current economic condition, you think, "Gosh, I'd love to free up my $1,000 or $1,500 mortgage payment each month and not have that payment," you can refinance your current mortgage. I know you touched on for purchases as well. You can use a reverse mortgage for a purchase, but on a refinance scenario, you can refinance into a reverse mortgage from a forward mortgage, and you won't have a payment. And now you could be in that reverse mortgage for, say, a couple of years. If financial circumstances change, you could refinance back out of that reverse mortgage into a regular mortgage if you wanted to. So there is that ability to get in and out of it. You're not stuck in it forever,
Right.
Per se, but it would allow you to stay in your home if it makes more sense for your quality of life, for your particular situation. Stay where you are. Maybe the home health or medical care that you may need is going to be expensive. It's better to stay in your home, have home health care versus going to assisted living facility. And now I'm talking about borrowers, homeowners that are maybe more advanced in age. But you've really got a window there from age 62 to 30, 40 years, right? 100 years old and beyond, where you could stay in your home
That'd be
and you
awesome.
wouldn't have a mortgage payment.
Yeah, and when we talk to borrowers, we're always looking like if they're going to be moving within 3 to 5 years, it's most likely not the best fit.
Agreed.
If they're going to go to like a assisted care living or nursing facility within the next year or two, this is not a good fit.
Correct.
So there are scenarios where this is totally not your product, just because the fees are higher than usual.
They
so
are.
the costs associated, it might not be the best option. A basic line of credit on your home might be better than this. But like when you were talking about like how long the calculations that reverse mortgages are built off of is men are going to live at least 20 years past 62, so to 82. That's just the average life expectancy that it used to be. Women's life expectancy is longer, so they're actually doing a 23-year look at refinance. And so what that means is every year you get older, you actually have more money to pull on your home.
That's true.
It's a really interesting scenario because they're saying as you shorten the term of the loan, then you have more of a balance available.
That's right.
So,
Yeah, that's an interesting, a borrower who's 72
mhm,
versus 62 has more equity to tap into
that's right.
because again, it's all based on life expectancy, as you
Yeah,
said, kind of an actuary table.
yeah.
So it's a really great tool, and you've actually had a client who was selling their home, had
Mhm.
just a boatload of equity, but really wasn't in a financial position to qualify for a regular mortgage, and so they were taking proceeds from the sale and looking at doing a reverse for purchase. We
Mhm.
actually, in that scenario, we went a different route. And that's the other thing about exploring this option is if it's not the right move, we're going to help you and coach you through that, right? It's just
That's right.
another tool in the toolbox that may or may not be the right decision. But if you don't know about it, then how can you evaluate it as a viable option?
Yeah.
So it just really comes into light in several circumstances that, gosh, I can think of a handful of clients. In fact, a really close friend of mine, their parents just closed on a reverse mortgage. Actually, her mother, just single mom, closed on her reverse mortgage about a month ago.
Yeah.
And it just made so much sense. Keep her in her home, take out some cash, either pay off some other debt or just have some cash to travel with or whatever. And it really is a great way. It's a great tool in a lot of instances.
It really is. A lot of people are out there. If you're one of them that is, house rich and cash poor, this is an old phrase.
Hmm.
You have a lot of equity in your home, or it's totally paid off, or you don't have a very big balance. Um, Feel free to connect with your favorite loan officer that provides reverse mortgages and just pick their brain about what this could look like for you and your financial freedom. And what you'll find out, hopefully, is it could be a great option for you now or down the road. A
Hmm.
lot of people just like knowing that it's there for them and they might take it out in a year or 2 or 5 years and just want to age in place of their home.
Hmm.
And and honestly, some people spend the money on living that life that they want to live. Those bucket lists that you haven't been able to accomplish because the funds aren't there, you might be able to do with the equity in your home. um, One good thing to kind of note, I know before we kind of wrap up, is the options available for cashing out the equity in your home with a reverse mortgage there's really five big options.
Hmm.
But the simple version of explaining them is there could be a lump sum payment, and there also is basically a line of credit that you
Hmm.
pull when you need it. Or you could also set up automatic payments, but that basically automatic payments is treated like the line of credit. There is a fixed, if you're like, man, what if rates go to 12%? I'm worried about that. I don't want an adjustable loan. There is a fixed loan option for a reverse mortgage, but it doesn't have any options but one lump sum payment, no line
Hmm.
of credit.
Hmm.
It's probably the least used option of a reverse mortgage. Like, very few people use that option because they want the line of credit to be able to pull as their equity grows. So there is a fixed loan option. It's just one big, huge lump sum payment, but you're not going to be able to draw on that in the future. You have to refinance the whole thing again.
Hmm.
So it's not one we advocate most of the time. We have not had a person use that option, but it is there. If people want just a peace of mind, I'm going to go on a world cruise for 10 years.
Right?
I want my lump sum payment now, and I don't want to worry about anything else.
That's right.
That could be a good option for you.
You could do it.
So,
Yeah, that sounds
but the
fun.
line of credit is a beautiful thing because you can get money every month back into your bank account on your home.
Yes.
You know,
Supplementing that pension or supplementing
right.
Social Security or using this as a bridge if you've deferred Social Security for another few years for whatever reason to get a
Hmm.
larger Social Security income in the future using the reverse mortgage now to supplement. Again, we're gonna dissect all those options. It might make more sense to sell your home, take the lump sum, and go rent something or go buy
Hmm.
a smaller condo or townhome that doesn't have the property maintenance or whatever it is that's costing you on a monthly basis. So
Yeah.
we're going to evaluate all those options. I know that there are dozens of ways to structure these.
There is,
So
and a lot of people are out there. They're like, man, I've spent 20 to 30 years paying my mortgage. What do I get out of that? I don't want to sell my house. Well, you can get a reverse mortgage and get
yeah,
money back.
yeah, and
So,
something we didn't really touch on is the loan to value is very conservative. So just to
oh,
give
yeah.
you an example, if you have a 500,000 valuation house, you're probably borrowing no more than maybe 30 to 50% of
That's right.
that value. So 150 to 250. It's not like you're borrowing 400,000 against a 500 house and you're really pushing the equity limits there. It's very restrictive in how much you can borrow, which helps you maintain a healthy cushion so
Yeah.
that if you do sell the house in 4 or 5 years, you still have some good equity.
Yeah.
You're not depleting all that equity so fast and so thoroughly that you're wiped out to zero. It would take probably 2 decades really to wipe out, or more, to wipe out that equity position if you have the reverse mortgage for 20 or 30 years.
Yeah, and what's interesting is there's baked in the appreciation of the
Right.
value of the home. So it never really, according to the bank's calculation, it never catches up
Right.
because the equity of your home is never going to hit the value of your home on the
There's some
amortization
safeguards
table.
there.
There's some safeguards there.
Yeah.
And obviously those calculations aren't perfect, but the bank is, knowing that it could be a great scenario for you to not have a monthly payment. And so
Right.
they want to make it work for you.
Right.
But
and the counseling goes through a lot of that too. Like we
it really
we
does. Yeah.
mandate the HUD approved counseling,
Mhm.
and not that I've heard of this, but I'm sure there are folks out there that have been through the counseling and maybe decided, oh, this doesn't sound like it's for me.
Yeah.
But most of the time, the counseling has really reaffirmed
Right.
that it is a good decision in some cases, in those cases, to proceed with the reverse. So yeah, it's
And
a good option.
what's fun with these ones is similar to a reverse mortgage. There's a term of rescission, so it does have a 3-day rescission
Oh,
rule
that's
on
good.
that one. So let's say you find out your parents did a reverse mortgage on their home, and you're like, "That was not a good choice. When did you do that? We did that yesterday. We popped the champagne today." And we're like, "Let's go back there and reverse. Like, let's change your minds." So there is an ability to change your mind within three days on that one, which is good because sometimes family members don't know that their parents are doing that. A lot of family members are uneducated on what it really means, and so they freak out when they find out their parents are putting a reverse mortgage on. Please just talk to your lender. If you have questions, or if you have family members that are thinking about it and you want to help them make good decisions, we're here for you.
Yes.
And so if you're in Texas, we'd love to take your calls and help you out.
Absolutely. And as you mentioned early on, I think in the show, we have a department dedicated to this at
Yeah.
Benchmark. So we have the gentleman that runs this department has been literally in the reverse mortgage space for 35 years.
Yeah.
Since it first started. So the lights just went out on
The
us.
lights went out. They're like, close the curtains. These guys are talking too long.
All right. Well, I guess that wraps us up for
Yes,
today.
it does.
Okay.
It's great. Well, thank you so much for tuning into the Lending Podcast. Please like, subscribe, and share. And if you have comments of what you want to hear more of, please put that below on our YouTube page, and we'd love to get back to you.
All right. Take care. See you
Thank
next
you.
time.